Hi everyone, Nate Fisher here again from the Financial Enthusiast. Welcome to part 2 of my Options for Noob series. In this one, I wanted to go over why I bought when I did and how you can learn when to sell and buy as well. Basically, I'm going to be going over a bunch of charts from TradingView, and I wanted to give you a lot of different examples. I wanted to also define some of the concepts you're probably hearing some of these professionals talk about that you don't know about yet. So again, this is pretty much for the new person. Do not use this as financial advice. Please, for whatever you do, speak to a financial advisor. Right now, I'm going to pretty much be showing you what I did for educational purposes only. So to start off with, I got a definition for you for RSI, a Relative Strength Index. On the screen here, you can see the RSI at the bottom, and this is for the gold chart. Now, the RSI is defined as a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, a line graph that moves between two extremes and can have a reading from 0 to 100. So if you just take a look at this, you can see, I got my pointer here, the really high RSI shows the really high gold price, and then you can see when the RSI is really low, you can see this is also relating to dips in price, and you can see it move up again, and this is a peak, down again, this is a trough, up again, peak, so on and so forth. So the idea here is if I'm trading and I'm sitting here and I see it getting out of this or approaching the top of this range, I'm sitting here thinking to myself, these are probably good sell signals. The problem with it being is if you sold everything right here at 70 last year, June, July, for gold, if you had sold everything here, you would miss this massive up move. So it doesn't necessarily mean you should sell everything right when it hits this, but it's an indicator that's telling you, hey, look, it's getting a little long in the tooth here, and then you can see this thing just jump way up off the sheets. And this is when people were telling us, all the pros were saying, hey, you know, I'm taking some profits, I'm selling some stuff off, and then you can see it did move down on and off. You can see this, so you could pretty much, if you knew this channel was coming, which you didn't know then, but if you knew, you could probably buy some time some buys at the lows and sell items near the highs, so on and so forth. So that's what the RSI. Also in here you have the fib retracement levels. So I'm going to show you here. I don't have a definition here for you for that one. You can look this up, but a fib retracement level, you would look at the bottom of a move to the top of a move, and you would draw it out with your tool on TradingView. You can draw it out, and then what it will show you is, hey, when this thing does pull back, how far, what levels it's going to pull back to. And a lot of this is market psychology. So I had bought a big tranche of my options around here at the 50 retracement level. It did drop another one to a 0.618. And this here was where I kind of backed up the truck and bought most of my options, which I'll talk about later on. But this is, I used the fib retracement tool to kind of give me a pretty good idea with this, along with the RSI. Because if you saw, I was writing some stuff on Twitter a couple weeks ago saying, hey guys, I'm out of a lot of my stuff right now. I'm taking profits. I'm sitting on some cash. And I was waiting for this pullback. I mean, it doesn't always happen where it's pulling back as strong. Like you could see over here, it's a top, but then it only comes here. It doesn't go all the way down. So I thought that things were, if you saw this move for like 2 months, you knew that there was some sort of correction coming. Now, I think a lot of people were seeing the correction was, you see this channel trend here. I think a lot of people thought it was going to hit this level here around 1820, 1830, and then bounce off and go up. But it fell completely through. And the macro picture here is the fundamentals didn't really change. The Fed had talked about some possible rate hikes 2 or 3 years from now for like a quarter or half a point, whatever it was. It wasn't a lot. So with that, you have the fib retracement. It's more or less with psychology, with people capitulating and buying in, and a 0.618 level. It doesn't mean it can't go further beyond this, but this is where I was looking as, hey, if I had to guess with this low RSI, this might be a good entry point. Now, it doesn't mean it can't go lower. Now, if you take a look last year, you had the highs here before the crash, and then it went down, and if you take a look at this, it was all the way down to 25 or so, and then it rebounded up. So you were if you bought here and then held, you would be okay in like a month or so. So these things, it's not an exact science, but it gives you a good indicator about where to look at entry points. Now, right now on this as well, you're looking at the 50-day moving average and the 200-day moving average. The 200-day moving average is a slower moving one, and the 50-day one is more in line with the trading patterns. But what those are, I have a definition for you for the 200-day moving average. It's far away from I have a little thing here that if you're pretty far from the 200-day moving average, it tends to revert to the mean at times, and I'll show you an example of that a little bit later. But in here, it says it is a technical indicator compiled as a statistical series of a security's closing prices throughout 200 consecutive trading days, or 50 days for the 50-day moving average. A 200-day moving average is designed to discover changes in a trend. Generally, a moving average is superimposed on a stock's line chart. So, and this gives you a pretty good indication of a trend, and they'll tell you, all the technical guys, when you're around these things, they may bounce off the 200 or bounce off the 50, or if it goes through, then the bots will continue to sell off. I also have a note here then with silver. I'm talking about the RSI, and this is what I want to talk about with the RSI. So last year, when we had that huge problem with the March sell-off, now if you sold everything at the top up here, so or took profits or whatever it is, and you looked at this and you bought right here, now look, there was a big drop off from there. So it doesn't mean if it hits this line, it's done dropping. But if you take a look at that drop off and that recovery, I looked at this and it was a matter of about 2 weeks. Now, if you sold off here, say you bought here, or bought here at the low, if you look, it's like, what is this, March 12th, and it looks like March 24th, or 10 days later, you would be pretty much equal to where you were beforehand. So that RSI, it showed it was pretty low. If you bought there, yes, you had further downside risk, but it kind of recovered quickly. So you're not, unless it's a complete collapse like a 1929 or 1931 collapse, it looks like on this one here, it was a pretty quick recovery. It doesn't mean everything's going to bounce up like that. So with this RSI, I wanted to show you how does RSI get lower. It gets worked off with either time or price. And I just wanted to show two different examples here for you. So in this one here, this is how price will bring down your RSI. Look at how overbought this is. This RSI is 86 right here. I think a lot of people at this point in time were selling off a lot of their mining stocks, saying, hey, look how high this is. We're bound to have a correction. Well, I mean, you're going a year ago, and you got people like me that are still pretty new to this, and we're seeing, silver to 50, it's going all the way, and we didn't know any better. But these are the types of things you learn over time that I wanted to share with people that are newer with this, so that if you did sell some of your profits off, or get out of a third of your positions, or a half, or whatever, you go to a lot of cash, you can see a correction, it comes down, and then this RSI is still kind of high, and then this thing just works off some time, and then it drops off further. And now, down here, if you were a buyer down here, that is a great entry point. So you could have bought down here, your mining stock somewhere around 22, and look, your next sell signal is somewhere up around 26. So you're looking at a $4 move in silver, and then you're saying, hey, look, it's kind of high. Maybe you sell off some stuff, and then you see it moved up again. But here, look, it peaked up here, and then it moved all the way down here over the course of 2 months. So again, if you were selling a lot near this peak, around the silver squeeze time, if you were selling at that point in time, because again, everyone also thought, hey, we're hitting $30 or $40. So you could have a real high run up with RSI like you did here. So at this point in time, maybe you sell 10 or 15%. Maybe you just sell a little bit if you have some real good profits banked on some of your juniors. Maybe if you have some unrealized gain with your juniors, maybe there's a good point in time to bank some profits. So you sell off some portion. Maybe time goes by. Maybe you're selling a little bit more off. But then look, bam, goes back down again. So here's another buy signal. So price is one way. The price dropping works off the RSI. But here's another example where I showed a period here of basically, what is this, about a month and a half, where the price kind of went sideways, but the RSI went from 77 down to 55, I think it was, 53. So the RSI went down 25 points or so, somewhere give or take of that, and price went sideways. So you can see potentially a good buy area. It might be when the RSI went down, maybe you buy another tranche in here of some things when price is going sideways. Now, right now, when price was going sideways, this is before it did that launch into orbit. Now, all the technical guys I was talking about they were saying about how this sideways movement was coiling in price. Something big was about to happen. Well, you can also see, I'm going to go into the silver, a bunch of buys and sells in a couple minutes, but what else do we have here? Let's see. Okay, so I worked off the RSI with a price or time, but now I also want to talk about another thing with patterns. You hear about the technical guys talking about their patterns. Now, again, this stuff is not an exact science. This is more of an art form as well, and you draw lines on there. But I think it was 85-90% of all trades these days are done by artificial intelligence, done by bots, algos, quant analysis, all the quant tools, all that other fun stuff. So a lot of the guys that are out there doing trading with technicals, maybe they're getting 70% wins, maybe 60% wins. So this is not an exact science, but if they do enough of these and they find enough of these, they can actually make some good side money. Now, if you take a look at this, you're looking at an ascending triangle. Now, the pattern says it goes up and consolidates and then bam, goes up north. Now, that is like 70 or 80% of the time. It could also break down, which you'll see. But in this position here, if I'm doing technical trading, I can see that, well, wait a second, this is at the bottom of a triangle. Now, it doesn't mean it can't go to the bigger triangle that I'm seeing and bounce off of down here. So it looks like it potentially, if it wanted to, it could get washed out to $25 yet for silver. However, I'm looking at this as in context of all of my other tools I'm looking at, and I see silver at 25.90 or something. It was somewhere around there, 25, 26, whatever, on Wednesday, Thursday, Friday when I just laid the law down. So I thought, okay, well, you know what? It might get another run up. Maybe it comes back a little bit. Maybe it then launches into orbit. So it was a very attractive price if you're using that. Now, if you look at gold behaves somewhat differently than silver. Silver looked like it kind of over the last year has been forming that ascending triangle and kind of doing a sideways thing where you're getting higher lows, but these highs kind of across the top are you're hitting some resistance. So there's your ascending triangle. But gold hit its high and it's been flagging down, and then it broke out from this point here. Was it about 2 months ago? Went way up, and then if you look at this RSI, look at that high RSI. So this is about the point in time where I was getting out of stuff, and using that channel, most of us thought that gold was going to bounce off of here, and that just so happens to be around the 0.382. So when it went down to the 0.5 is when I bought my first tranche of options, and then it broke down further to the 0.618, and that's when the RSI was down here in the gutter, and I was like, that's when I backed up the truck. So it doesn't mean it can't break down any further. If you take a look at this longer trend, you can see a longer trend line here, and you could see potentially this would break down to here, which will pretty much be the other channel that we were dealing with. and the trend line. So as this guy, I watch John Howell a lot, X marks a spot. This could be pretty much maybe 1739, 1740, 1750, or it catches a bid right now and starts moving up. So maybe later this week we start to see a rise in price. So that was the channel pattern that we had seen. Now that had broken out. Now it came back to retest, but then it broke through that. So where is it going to stop? I had made a bet on the 0.618 with that low RSI. So like you saw with silver, it could continue down further, like we saw last year. Where's that at? Like we saw last year, that RSI could go completely down into the gutter, but look at that V bounce up. So one of the things that I thought was very interesting with this RSI was there was a sideways period of time, and then it moved up sharply. And that coiling that they're talking about, this tight sideways movement, and then bam, that went up. So it launched into orbit. So over here, what I'm looking at here is because it was such a sharp move down, I thought it was going to be a sharp move back up. Very similar to how we saw the sharp move down, sharp move up. And then also, when you see a sharp move up, you see a sharp move down. Oftentimes you see that sharp move up, sharp move down. So again, part of this was connecting all the dots. So next up, here's a little bit of a crazy diagram. I'm going to walk through some of this stuff over the last year. Now, I wanted to bring this to your attention because this also includes something called the MACD. Now, I use this. It's tough to use because if you are a professional trader, if you are professionally managing other people's money, you have a much less risk tolerance than if you are just sitting at your house trading. So for me, let me go over to MACD real quick. The MACD is an indicator, is a momentum oscillator primarily used to trade trends. Although it is an oscillator, it is not typically used to identify overbought or oversold conditions. It appears in the chart as two lines which oscillate without boundaries. The crossover of the two lines give trading signals similar to two moving average system. Okay, so basically what I'm looking at here is when these crossovers happen and there's dips, it's telling you, okay, that's a good buy signal. But if I'm using the RSI, I bought, man, I backed up the truck down here, but this is telling me afterwards. It's like a trailing indicator that, okay, the trend has been confirmed. So if you're me and you're going to swing for the fences, you're probably buying somewhere in this trough. You're buying at the low end here. But if you're managing money, you're waiting until you get the crossover, and then when you get the crossover, big money starts going into that trend. So you can get in early, and it's like a ghost town, and no one's buying in, and you're like, I don't understand. I bought in at an oversold area, and no one's catching a bid here. It can be a very lonely period of time where you're waiting for other people to catch on. Well, a lot of times what that might be is it might be the MACD trying to confirm the trend. So if you look, let's go through a bunch of these things. So right here, the dip last March, man, this is a buy, and I'm buying at this low RSI, but then the MACD says, well, you know what, let's buy a little bit later. And then furthermore, if you're looking at the RSI, hey, it peaks up above this 70 here, and it says, hey, this is a pretty good sell signal. But the MACD didn't say it yet. So on and on, you can see there's a lot of things here where maybe the RSI tells you to sell about right here, and then you notice you missed this whole big move up, whereas the MACD would tell you to sell later. So, but the big thing here with that, again, I mentioned there was a lot of sideways movement before that move up. So if I'm dealing with like a month of sideways movement, I might not sell the second that RSI hits 70. I mean, I might sell 10 or 15%, but with this coiling up, I might be waiting a little bit to sell some more. That being said, it's not an exact science, so again, don't listen to me. Do your own research. But what you can see here is that with all these buy and sells, I have them all labeled. You can see that the MACD is pretty much trailing all of these, and the right here you can see where at the top here you're selling the RSI, the bottom here you're buying the RSI, but and so it's a pretty good indicator for me with the RSI to tell you when to buy and sell, and then the MACD is kind of confirming it, and then that's when bigger money comes in and starts really moving it. So if you're managing other people's money, you're not listening to me right now, but that's probably where you're looking at the MACD to. So they are probably buying in a little bit on the late side, so they're not catching the bottom, and they're probably selling after a top is hit. So they're not selling near the top. They're probably waiting until it crests over and then selling on the other side because it lags. So that's pretty much what the MACD does. Let's see, what else do we got here? Oh yeah. Okay, so I want to show a couple examples here. A lot of people will tell me, "Hey Nate, why don't you publish like your favorite miners?" Well, I have great miners, but they may not be the best times to get in on them. So my best performing right now is Labrador Gold, and Labrador, I bought it 35 cents on a. I'm a subscriber of the Junior Miner Junkie, and he said, "Buy in on this thing." This is right next to Newfound Gold. Dr. Quentin Henney runs it. It could be a monster, and I know Newfound Gold is absolutely crazy with price right now. So this is the property directly right next door to it, the same geology team, and I saw they started to get some good drill results. So I bought in at 35, and man, this thing just launched into orbit. Okay, so why would people be buying when the RSI is so high like this? Now, this is when I was selling, I think when it was $1.05. Where's that at? Somewhere around here. At around $1.05, I sold pretty much about a third or so of what I had. So I sold a third. So on high risk plays, if you sell half and then leave the other half run, you get that for free. And this ran up so quickly on me, I wasn't even paying attention. And next thing you know, I had a 3-bagger, and I sold a third of it, whatever it was. It was like a third, and then I left the rest of it in for free. So why were you buying up here? Now, this isn't going to be working the same way that gold and silver does, because this is a junior miner, and they run on discoveries. And I'm going to show you another example of this. So this is far over the 200-day moving average. So I personally would not be chasing Labrador Gold here, but I'm going to give you another example here of Philo Mining. Now Philo, I had this is in Canadian dollars, by the way. I couldn't find the American, the US dollars. So I actually had it when it was probably about $1.75 Canadian. I had it last year. I held it for 6 months and it didn't move. You can see this whole not moving thing, right? It just didn't move. I'm sitting on it, and I forget. I think it was the Lundin family had a big stake in this. I think it was them. So I had this great miner. I had this great, but nothing. Didn't move at all. Got rid of it. 6 months. Had a full position. I was like, this is a dog. It's just, I'm getting rid of it. And then bam, look at this. They got a discovery. So I think this went up like 6x, 7x, something like that from its low. So you can see this gap up. And on juniors, where you have explorers and like they have discoveries, you're going to be seeing some monster moves. So it's great. If I had $1.45 or whatever it was, if I had that and just let that run, that would be great. But that being said, is look at the 200-day moving average, look at the 50-day moving average. This is well above that. Look at the RSI. Now, maybe, and it's still an early play here. So, I mean, are they going to go from 9 to 50? Not likely. Right now, I think the move has been made. So they're probably going to come back down to earth and then lag for a while. Lots of permitting. These mines take forever to get built. But the discovery was made. And that's where there is an opportunity here why you might buy at high RSI. On the flip side, I want to show you one of the options I had bought. Okay. So this is Silvercrest. I've been keeping an eye on them for about a year and a half. They seem to have been overpriced just because it seems like they're going to be a producer sometime soon. I think right now they have a construction decision, so I think it's like, I don't know, 6 to 12 months until the mine, and then they're producing. But with them, they have really low cost of silver. Everybody loves them, but the price was kind of high for me. But for options, with this smackdown of silver, they were now below the 200-day moving average. I saw the lower RSI. I said, you know what? So I got options on them, I believe for March of next year or something like that. So anyway, this was a much better entry point than if you were to chase a Philo. You don't want to chase something way above the 200-day. Now, I also have Metalla options. Now, I got this one from the Silver Chartist. I recommend you definitely buy into their subscription. Now, with them as well, they gave a tip on this because it was just above the 200-day moving average. And they give the tip, and then silver and gold got smashed, and that's when I bought, when the price went down even further. RSI was down here. So I got in on this pretty good, and I noticed as a bonus, there was a pattern forming here of a long-term trend line, and it looks like there might be an ascending triangle forming here. So there could be an explosive move up here sometime the next 2 to 4 months. And these options I think I got for November. Another one here, you're looking at GDX. This is where a lot of my options I bought were. And there, I wanted to show you everything to set this one up because with the GDX, it has a high beta to gold. The chart looks a lot like the gold chart. You can see also you're below the 200-day moving average. You can also see, look how oversold this is. So it's quite possible, I'm looking at this here, that in maybe a week or so, this MACD is going to cross back over. And then bam, this thing is going to start launching. So that was one of the reasons I bought into the GDX. Same thing you can see with wheat and precious metals. You got a trend line coming up here. It looks like an ascending triangle. And this was just about bouncing off the 200-day moving average, but look at that lower RSI. So all these things put together, I have my trading positions here. Silly me, I never saved the Excel sheet where I put this on, so that took me a good hour to put together. I'll probably rebuild this again this weekend. But here are my options positions I put in, and that was as of Friday. Today, price of gold and silver recovered a bit, so I'm up pretty decent today on these. I'm not going to do a day by day on these, but I wanted to show you the bigger picture, the tools, the tricks, why you get in at certain points in time, and then also when you might be selling some of these things. Now, with my options, I have also target prices I'm looking at that are like long term, where the big target prices might be. But these target prices are potentially where I'm selling some. Is this? Yeah, this is my initial sell strategy. So when they get to a certain value, that's when I'm going to be selling maybe a third of my position. But you know, when's it going to get to this 3x for these options? And again, if you just have things reverting to the mean with the 200-day moving average, you're still making tremendous money here. So the hope is here, as you've seen with some of these, you saw last year this really sharp move down the V, and then it came right back up. I think we're going to be running into something very similar to this over here, just because nothing really fundamentally changed with gold or silver, and I'm playing this V pattern here. So we might be running a really high RSI, and I'm going to have my initial sell strategy executed. So maybe it only runs up to about right here or so. Maybe here, 1858 gold, somewhere around there, I think, is where I'm going to have my initial targets. And then the rest of it here, the rest of the options I'm going to be getting for free, so to speak. So if this all pans out, this is a nice payday. Anybody that's done trading for 5 minutes will realize that their plans all change when you get punched in the mouth. So for all we know, gold can get smashed another $100 in the next week. No one really knows, but what you have to do is give the best information you have, looking at the RSIs, looking at the MACDs. Use a lot of these indicators to try and find a trading style that works for you. Look at a lot of the guys online. Look at the pros. Like I said, don't listen to me, because what I did, uh, basically, I bought right here at the bottom, and I would say I got lucky, but I was looking for, because if you look at these bottoms again, once these bottoms are all at, I mean, when these RSIs are bottoms, there's really good moves up after this. So the hope here was I got a nice V. It may not, it might go sideways a little bit for a couple weeks and then launch up. But right now, I'm waiting to see over the next week or so to see if this MACD crosses back over. I want to see a price recovery in gold, and we'll see what happens. The big thing here, I made mention of. Let's go back to the gold chart. If you look at the move last year in gold, this is today's June 21st. If you look at June 21st on last year's chart, about right here, you're looking at 1740 gold, and it moved up to 2076 or so as a close that day. So what you were looking at is potentially 350, whatever it was, move from today until the end of July. And what was it, the beginning of August. So right now, I in my article, I put a whole bunch of lists of reasons why, what was going on during this period of time. So those were the macro indicators. If you take a look, I got a lot of the macro indicators that are going on here. The big thing is that the move up of July may not be exactly the same, but we have potentially a big issue with this whole Basel III thing happening. This dollar strength, so to speak, is going to drop off of a cliff, I think. So no one knows what's going to happen, everyone. I'll have a couple more of these videos over the next few weeks. Probably next one is going to go over more in detail about, how I'm doing. I want to try and do it possibly around the initial sell strategy. But with that, if you have any comments, questions, please leave it below. Thank you. Hi again. Something else I did not add to this video. I want to talk about the DXY a little bit, because as you see gold and silver go up and down and the like, there is a relationship that's right now being inverse to the dollar. It doesn't always happen, but you can see at times where, like for instance, from 2001 through 2008, as the dollar was falling, gold and silver was rising. But you can see this flips. Gold and silver were rising pretty much through 2011, but you could see this one up and down and up and down, and it broke from the pattern. But what I saw here, which I don't think I've seen anybody talk about, but it looks like the dollar is forming a giant triangle. What do you call that? I guess that just a regular triangle here. So with this, a lot of people think that X marks a spot here anywhere below 88.5 or so. Gold, it's going to be really bullish for gold and silver. That is if it's tracking inversely with the dollar. A lot of the dollar milkshake guys think, okay, well, wait a second here. If we have a stock market sell-off, all of a sudden we're going to be seeing 130, 140 of the DXY. If it's some sort of horrible sell-off, and that's possible. But right now, I just wanted to bring this up because of how close we are to this triangle. If this thing breaks down, it can break down in a hurry, because a lot of these movements happen 75 to 80% in. So it could bounce off the bottom here and then have a sell-off of the stock market and just go parabolic, and then that would not be good for gold and silver, but it's not good for anything else. That's what the deflationists think. Now, you have also in that camp with the deflationists, they still think, a lot of these guys think it's going to melt up more. And if there's a melt up in the stock market, that's going to take the dollar below this trend line. If it takes this dollar below the trend line and it drops below 88.5, a lot of people think that this is going to keep going down to 70, 80, 70, 75, somewhere in this range, which is tremendously bullish for gold and silver. So I'm not sure how the stock market continue to melt up and us not get below 80s, but yet have a move up where we're at like 130, 140 with the DXY. Now I bring this up because I wanted to zoom in on where we are pretty much right now, what's happened over the last month or two. So as you can see, gold had a really good move over the last 2 months. So you could see pretty much the end of March, and the dollar went all the way down, into pretty much the end of May. Now the dollar starts moving up a little bit. Gold and silver having a little bit of an issue. But in context, this trend line that has formed was broken. Now the question here that the technical guys would say is, this trend was broken. Is it going to retest this trend line and then bounce up, which is not good for gold and silver? And this would support the deflationist theory. If it's bounced off of here, that's a timeline pretty much of when you would see a market crash of sorts. Or was this a false breakout on news that really didn't do much of anything really? And the DXY continues to break back down. So the reason I bring this up is because if you take a look at this RSI would suggest that it didn't really have a lot of room to go yet, that it was all overbought, and over the course of the next month or two, this can run the other way. So this was also part of what was in my mind for buying at that point in time, because as you were seeing this RSI was a top, you were seeing the RSI gold at a bottom. So again, just more indicators to add to your toolbox here. You look at sometimes how the DXY performs inversely to gold. So add that if you want, and have a good day. Thanks.
And as always, guys, please don't forget to like and subscribe to our channels. It helps the algorithm in YouTube send this video out more and more. We really appreciate all your support. Until next time.